Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Hello traders, and welcome back to the channel where we demystify the markets. Today, we're doing a deep dive into a fascinating little company that recently hit our scanners, Educational Development Corporation, ticker symbol EDUC. This isn't just any stock, it's a small cap gem in the communication services sector, specifically within publishing, that's shown some intriguing signs. Let's break it down. EDUC, or Educational Development Corporation, is a $13.04 million market cap company operating firmly in penny stock territory. They specialize in distributing children's books, educational toys, and games across the US through their paper pie and publishing segments. Think engaging content for young minds. Now, looking at its recent price action, EDUC has seen a plus 0.63% change today and a matching plus 0.63% over the last 5 days. But zoom out to the last 30 days, and you see a more significant jump of plus 8.96%. Currently, EDUC is trading 14.1% below its 52-week high of $1.08,400, but impressively, it's 58.0% above its 52-week low of $1, indicating a strong recovery from its yearly bottom. Volume-wise, today's trading saw 13,409 shares change hands. That's significantly lower than its 30-day average volume of 115,203 shares. However, it's crucial to note that when EDUC first triggered our scanner, it was doing so on a relative volume of 0.1x above its average, signaling a specific spike in interest at the time. So, why did EDUC pop up on our radar? Our proprietary scanner, which sifts through thousands of stocks daily, flagged EDUC due to a powerful confluence of technical signals. Primary confirmation came from what we call the VWAP and EMA alignment 8. In simple terms, this means the stock's price was trading above its volume-weighted moving average, suggesting buying pressure. At the same time, the ADX, which measures trend strength, was robustly above 18, confirming a legitimate trend, not just random noise. And finally, the Relative Strength Index, or RSI, was comfortably nestled in the healthy momentum zone between 45 and 68. This triple confirmation filter is crucial for weeding out false breakouts and giving us higher conviction signals. EDUC didn't just meet one criteria, it triggered 3 distinct screening strategies. First, we have used VAID, which translates to long-term trend alignment. Joe's strategy text. This strategy looks for stocks where all major simple moving averages, the 50, 100, and 200-day SMA, are stacked bullishly, meaning the shorter-term averages are above the longer-term ones, signaling a clear, sustained uptrend. The ADX confirmation here tells us this trend has real underlying strength. Next up is Turbo AVCC, or Double Bottom Hunter. Highlight text. This strategy identifies stocks with a positive 3-month performance that have formed the classic double bottom reversal pattern. For EDUC, this means it showed consistent upward movement over the past quarter, with its RSI in a strong momentum zone and, crucially, increasing average volume as it bounced off its lows. Finally, we have Bogabirogi, or Bull Flag continuation. Zoom in on text. This strategy targets stocks demonstrating a strong monthly gain, which then consolidate in a tight range while still holding above their 50-day SMA, all happening with rising average volume. It's a classic setup for another leg higher after a brief pause. For those considering this setup, let's talk about the critical levels identified by our scanner. The initial scanner entry signal price for EDUC was $1.05,750. To manage risk effectively, a clear stop-loss level has been set at $1.05,671. As for potential profit targets, we have a tiered approach: T-point at $1.06,538, TP2 at $1.07,325, and an ambitious TP3 at $1.08,112. What makes this setup particularly compelling is the remarkable risk/reward ratio of 9.97. Highlight R/I. This means for every dollar you risk is a potential to gain nearly $10, making it a highly favorable proposition on paper. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given EDUC is a small cap stock with relatively low average volume, it's essential to exercise caution and diligence. Liquidity can be a concern, meaning price moves can be more volatile on lower volume. Always keep an eye on broader market sentiment, any company-specific news, and upcoming earnings reports that could impact its performance. Sticking to your stop-loss and profit targets precisely is paramount, especially with a stock like EDUC. Remember, the scanner provides a high-probability setup, but execution and discipline are entirely up to you. In summary, Educational Development Corporation, EDUC, presented a compelling setup on our scanners, driven by strong long-term trend alignment, a double bottom reversal, and a classic bull flag continuation pattern. With a favorable risk-reward ratio of nearly 1:10 and robust confirmation signals, it's certainly a stock worth keeping on your watch list for educational purposes. Always remember to trade smart, manage your risk, and continue to educate yourself. If you found this detailed breakdown helpful, please hit that like button, subscribe to the channel for more in-depth analysis, and drop a comment below with any questions or other stocks you'd like us to look at. Happy trading!